From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Just about 2 hours from right now, we are going to get the Fed minutes from the last meeting. And the markets, it's fair to say, are waiting with bated breath because they're not doing a whole lot today, waiting to find out what the minutes may tell us. To give us his view about what he's looking for in them, we turn now to Michael McKee. He's Bloomberg International Economics and Policy Correspondent. He is in Washington to get them hot off the presses, although I guess they don't come off the presses anymore, Mike.
They don't come off the presses hot off the Xerox machine or however they're going to print it out. The problem, David, is that these minutes are 3 weeks old now, and the world has changed. So I'm not sure exactly what Wall Street will get out of it. You think of what happened. It was February 1st that the Fed met and raised rates by a 1/4 percentage point. And since then, we've had a very strong jobs report. We've had a hot CPI report, and we've also had a hot and strong retail sales report. So whatever the Fed was thinking at the time, they may be thinking something different now. It's hard to tell. Wall Street is already thinking something different. You look at what's happened to the yield curve since the Fed last met. The yield curve has moved up substantially as traders price in more Fed rate hikes and for longer. And I guess the idea there is that maybe the markets are finally starting to believe the Fed when it says it's going to keep rates high for a long time. What might we get out of the minutes today? Well, Loretta Mester and Jim Bullard, the Cleveland and St. Louis Fed presidents, said that they could see a case for 50 basis points at the last meeting. So we'll want to know if anybody else did, because if there's a large group of them, that might make the case for a bigger move next time, given the data that we've gotten. We could also see whether they were thinking about a pause or what they were thinking about a pause. Jay Powell said at his news conference that we would be seeing details on what they thought about that in these minutes. So it doesn't look like they're going to pause now, but we can get some idea of what they were thinking. And then, was there a consensus for moving rates over their December 14th consensus projection of 5.1% in the dot plot? That's going to be an important thing for the markets today, because if the Fed was already thinking about a higher rate at a time when things looked a little bit better, they got to be thinking about even more today.
Okay, thank you so much to Bloomberg's Michael McKee. We turn now from a true expert on the outside to somebody who has been inside for these meetings. He's Randy Kroszner. He's now a professor of economics at the Chicago Booth School. Dr. Kroszner earlier served as a governor of the Federal Reserve. So, Randy, thank you so much for being back with us. Address what Mike was just saying. Are these out of date, or might they give us some indication of where members of the Fed were inclined to go before the latest data?
They give some indication, but exactly as Mike was saying, a lot of data have come out since then, and the Fed is going to be reacting to the current data, not to the old data. But I think the messaging has been incredibly clear. And exactly as Mike said, the markets have just not been willing to listen to it. They've been saying over and over, they're going to keep at it until they really see inflation consistently coming down. And it started to come down, but not come down in a consistent way. And also, the labor market is still very strong. Until the labor market cracks, they're going to keep at it. So I think the minutes are going to be consistent with what they've been saying, which is they're going to continue these 25 basis point increases. I don't think we're going to get enough detail to know exactly how many people said, oh, they wanted 50. But I think it'll be pretty clear that they're going to go another 25 and probably another 25 after that, resting somewhere between 5.25 and 5.5.
Randy, it's fair to say that the economic data came in stronger than a lot of people expected they would. I suppose a basic question for the Fed and for us is that because, in fact, the economy is actually more resistant to the medicine of rate hikes than we thought it was, or because there's just a lag? I mean, do you have an opinion on that subject?
Well, certainly there's a lag, but the Fed has now started their interest rate increases and reducing the size of the balance sheet about a year ago. So we should be seeing some impact of that now, and we're seeing it in some areas. For example, the housing market, we saw interest rates move up, mortgage rates move up, and some downturn in housing prices in some areas. So it has had some impacts. But we should be seeing some impact on the labor market by now. It's possible Some people have talked about an immaculate disinflation, that you can bring down the inflation rate without bringing down the unemployment rate. We've never had that happen before. I don't want to rule it out, but I wouldn't say that that is my base case.
Well, pursue that issue if you would, Randy, and that is there something flawed in the models, or if not flawed, just it's for a different time and a different place with respect to the relationship between inflation and employment? Because certainly I don't think it's following what classical economists would have told us.
For sure, we would think that by now you'd start to see a little bit of movement in the labor market, but as you said, it's been a long time since we've really seen these kinds of cycles. Also, I think this is one of the reasons why the market's been so reluctant to believe the Fed. The Fed hasn't taken the punch bowl away when the party's really gotten going for decades. So you've now got generations of people in the markets, and as well as folks at home who haven't seen the Fed actually tried to engineer an economic slowdown. So I think that's one of the reasons why they don't believe that the Fed really will want to do that. But I think it will do that at some point. Even if our models aren't exactly right, I think it's going to be really hard to see a significant decline in inflation if the labor market continues to be robust and wage growth is very strong, since we're such a service-oriented economy, and so much of cost of producing services is labor.
Randy, having sat on the board, I wonder how important optionality is for the board, particularly given the fact that the economic data is not necessarily coming the way you expected it would. You're not sure exactly whether to speed up or slow down. And it goes to the question of a 50 basis point rate hike as opposed to 25s that they can add some to down the road.
I think that's exactly right. You want to keep your options open because, I mean, even in more traditional times, there's an awful lot of uncertainty. You don't know the exact lags that will occur. You don't know what other shocks may come in. My goodness, there's so much risk in the world today, whether it's in the Ukraine or in Asia or in the Middle East, that could disrupt any traditional plan. So you want to keep your options open, and I think they're likely to kind of keep at the 25 basis point pace, but they're not going to rule out anything. If inflation spikes up, if the labor market grows even stronger than the most recent report, they might have to move more rapidly. But I think their base case is that they'll probably go 25 and at least a couple more meetings, and then they're going to hold there for quite some time.
Randy, as an economist, how do you think about the possibility of recession right now? As you go back a few months, everyone was saying, boy, it's pretty likely it's going to happen. I've seen a lot of those predictions come down some. Even people like Larry Summers, who still think it's probably more likely than that, not as likely as he thought it was 3 or 4 months ago, given the strength of the economic data. How likely do you think it is? We heard actually earlier today over on CNBC from St. Louis Fed President James Bullard, and he thinks the markets may be overpricing it. This is what he said.
I think that markets have overpriced a recession in the second half of 2022 and overpriced a recession in the first half of 2023. Maybe they're overpricing the chances of recession in the second half of 2023.
Randy, again, as an economist, what's your reaction?
So a lot of uncertainty about this, so it's hard to know exactly what to price in. My view is that as I said before, the Fed is going to hold interest rates up in, let's say, the mid-5s for quite some time. Inflation is going to be starting to come down. And if you think about what is really important for economic activity, it's not the nominal rate of interest, but the real rate of interest. That is the inflation-adjusted rate. So if the Fed holds interest rates, let's say, at 5.5%, but the inflation rate comes down by 2% over that time period, which is, I think, a reasonable estimate that, we've got inflation, depending on your favorite measure, 5 to 7 comes down, 200, 300 basis points. That's effectively 200 to 300 basis points of tightening, because the real rates, the real borrowing costs, the inflation adjusted borrowing costs have gone up. And I think that's where you get the chance for a recession coming in late this year or early next year.
Alrighty, as you said, there's more economic data we'll get before that March meeting of the Fed, and we'll wait. The Fed will wait for it. At the same time, the markets are giving some input all the time. We're seeing now the S&P, last time I checked, has given back almost all of what they gained this year. I think it's down to up about 4% or so. Does that help the Fed a little bit, because that's a form of tightening the monetary conditions?
It helps a little bit. Certainly, if there's incredible exuberance in the markets and credit is flowing really rapidly and everything is just on fire, that's certainly not going to help to bring inflation down. So I think it helps a bit, but I don't think that's the main driver. I think right now it's the labor market. I think 1 or 2 percentage points movements, or even 5 or 10% point movements in the S&P, certainly. Down is going to be a downer for economic activity and for excitement about the economy. But I think the main thing is really going to be the labor market.
And what about growth? Because typically, if you get more people working, you get more growth, as I understand it. Put very simply, are you more encouraged about GDP growth given where we are with the labor market?
So I think we're likely to get a reasonably strong print for GDP that's about to come out, and so you always want to have a good labor market. You want people to be well paid, lots of people to have job opportunities, to have good growth. But that's where the taking the punch bowl away when the party really gets going comes in, because right now we're doing that in an environment of quite high inflation, and high inflation can be really difficult, especially for families who have below median incomes. They tend to not get the kinds of increases in their wages that others do. More difficult for people to hedge out some of the inflation risks, and so I think you do. You want to root for the strong job market and a strong GDP growth, but you also have to take that with a grain of salt because inflation can be really problematic.
Professor, thank you so much. It's always a pleasure to have you with us and really helpful. That's Randy Kroszner. He's professor of economics at the Chicago Booth School. Coming up, Congress is in recess with the impasse over the debt ceiling far from resolved. We'll talk with Republican Congresswoman from New York, Nicole Malliotakis. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Congress is in recess this week, but when it gets back, it's going to have to contend once again with that debt ceiling, which is looming sometime this summer. We're not sure exactly when. Everyone seems to agree we don't want to renege on our debts. At the same time, it's not clear how we're going to avoid it. To take us through her approach to this, we welcome now Nicole Malliotakis. She's a Republican representative from New York and a member of the House Ways and Means Committee. So, Congresswoman, thank you so much for coming in. It's great to have you here.
It's great to be here.
So can you see a pathway forward? Because as I say, both Republicans and Democrats agree they don't want to renege on the debt.
Yeah.
But how you get there is not quite clear. Do you see a path?
I do see a path. I think that Speaker McCarthy has had successful conversations now with the White House. The White House is kind of changing its tune, saying it's willing to negotiate. And that's really what Republicans want. We want to make sure that we are putting forward an economic plan that puts us on the trajectory to reduce our debt, to balance our budget. We have not passed a budget in 7 years, okay? It's always been a continuing resolution or a temporary spending plan, but we have not actually done a budget as we're supposed to do. And I think that that's the goal of the new Speaker, of the new House. And the bottom line is we cannot continue on the path that we're on, right? $31.5 trillion debt. We have, it's a 121% our GDP. And the GDP ratio. So when you look at it from 20 years ago, the number was 60%, right? When the year was born, 1980, it was about 35%. So we can't afford to continue down this path for future generations. And the reality is, if we do, a couple of decades from now, you'll be looking at maybe 70 cents of every dollar going to pay debt interest. And so that is what we're trying to rectify here, just being fiscally responsible.
And that point, I think, was driven home last week by the CBO, the Congressional Budget Office report, on the deficit and the debt, which shows that it's getting worse fast. Even over the course of the last year or so, we've added a fair amount. Mm-hmm. At the same time, if you look at the numbers, we just had the head of the CBO on yesterday, the additional deficit and debt actually does not come from discretionary spending. It comes from the so-called entitlements and interest payments. And so can we really have that discussion without discussing what I guess is a third rail in politics for both Republicans and Democrats, which is Social Security and Medicare, because that's really what's racking up the deficit and the debt over the next 10 years.
Well, look, Republicans have said we want to protect, we want to preserve Medicare and Social Security. Those are important programs that our seniors and our disabled rely on. The biggest thing threatening those programs is the unsustainable spending, generally speaking. The administration, with the one-party rule that they had last year, they increased spending $10 trillion. It was completely unsustainable. If you look at last quarter's debt payment, $215 billion, and that was the largest increase in one quarter ever on record. And so that's what we're trying to have a real conversation here. We could look at discretionary funding. We should look on how we can make sure that we're running mandatory spending in a responsible way. You know, there's a lot of waste. There's a lot of fraud in some programs. And the reality is that we have to find those savings, but not by cutting the payments that our seniors rely on or the programs that our disabled rely on. I'll just give you an example. Like, look at the COVID relief spending for the last couple of years. You know, hundreds of billions of dollars in wasteful spending there and fraud in the unemployment program, in the PPP program. People who truly needed those programs weren't able to get that funding. But that's across the board in all different agencies. Hundreds of billions of dollars that in this new report is unaccounted property under the Department of Defense. That's what we're really kind of looking at and saying we need to put in place certain measures to be responsible. And we need to do what the Republicans did when President Obama was president, which was put in place discretionary spending caps, as you say, which controlled spending and held the line for a decade following.
When you talk about that COVID spending, is that what you're on a select subcommittee on COVID crisis, as I understand it? Is that what you're looking at? What is the function of that committee? What do you hope to accomplish?
Yeah, the committee is going to be looking at a whole bunch of different things. But on the Ways and Means Committee, we specifically had a hearing on the unemployment fraud. Taxpayers should be shocked and disgruntled and angry, quite frankly, as I am, to find out that people took these international organizations, by the way, stole billions and billions of dollars. Also, people fraudulently made claims that went on to buy $10 million villa in Dominican Republic or a mansion in New Jersey or Rolls Royces and Bentleys. That was what a lot of this money went to. So we need to put in those safeguards in place to make sure this does not happen. We have a couple of proposal ideas on how to do that going forward. But yes, the COVID Relief Committee is going to be looking at that, supporting what the Ways and Means Committee has already done, supporting what the Oversight Committee is doing. But we're also going to be looking at everything, right? From the origins of the virus, any taxpayer money that was funneled through EcoHealth Alliance from the NIH to Wuhan Lab to support gain of functioning. We're going to be looking at the school closures and the detriment that has had on our young people, how they are now behind and not learning at the level that they should be. We're going to be looking at the way that Governor Cuomo handled nursing homes, decisions that were made that were not in compliance with CDC regulations that led to thousands of nursing home deaths. We're going to be looking at a whole bunch of different things.
Congressman, I want to turn to one other subject before you leave, which is regulation or proposed regulation. There's a variety of regulations, particularly out of the SEC, that are being proposed that affect the financial community in ways that our audience pays attention to. One of them I know you've highlighted, which is really having to do with venture capitalists and perhaps liability for negligence. Give us a sense of where you think they are. As I understand, it's not a final reg yet, but it may become final as early as April.
Yeah, that is a proposed regulation that has come out of the SEC, which is a concern. Venture capitalists could be held liable if the investments fail, and obviously this would be a major problem. Look, they say it's high risk, high reward, and that's the whole purpose. You're trying to invest in new areas that people have not gone before, and particularly when we're talking about technology and AI, vaccines, all of that. Venture capitalists are willing to take those risks, and we can't allow this regulation to pass because it would definitely hinder investment in these important areas that we need to compete, particularly with China when it comes to defense and AI. So that is my concern with this regulation, and we need to at least have a real conversation about what the real-life impacts of this can be. There's already, in terms of fraud, obviously a lot of laws in place. It's overseen by the SEC, but we need to make sure that they're not hindering investment, as we're seeing so many other agencies under this administration come forward with regulations, with whether it's anti-energy policy that is hindering hindering expansion and investment in our infrastructure or other areas where we need to be investing and expanding, not hindering and making us less competitive, particularly with adversaries like China.
Really important issue. There's no doubt about it. Thank you so much, Congresswoman. That's Representative Nicole Malliotakis from New York. Still to come, what President Biden accomplished with his trip to Ukraine and Poland. We'll talk with retired Brigadier General Mark Kimmitt. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're about an hour and a half away now from those Fed minutes, and the markets may be waiting to figure out what they see in those minutes. To take us through the markets as of now, we turn now to Bloomberg's Abigail Doolittle. So what is going on?
Well, it seems that we are in a wait-and-see mode. We've been making very small moves to the upside and the downside, none larger than, I believe, about where we are right now. The S&P 500 up about 0.2%. It had been down. So to your point, really waiting for any color out of those Fed minutes for more information on what the Fed plans to do relative to hiking. As we discussed yesterday, Goldman is now saying that they believe the Fed will be hiking 25 in March, 25 in May, 25 in the summer. Coming into this year, if you recall, some folks thought they wouldn't even be hiking at all in February, but if there was a hike, it's 25. So the market is really catching up to the Fed. That's usually the way that it works. So we've had this little bit of a pullback, this repricing of risk that you were talking about yesterday. And again, right now, waiting for more color.
So the markets, have they capitulated, if I can use that word in this context, basically to the notion we're going to keep hiking for a little while here? Because they were talking about a cut toward the end of the year. That's
an interesting idea, using the word capitulation relative to what we're seeing. So in terms of a true capitulation, that would be a sell-off and then a quick bounce back. I would say, though, to your point, the markets have gotten their head around the idea that, yes, the Fed is serious about hiking, that they are going to be doing that. We're no longer looking at those cuts that you were talking about. And I wouldn't be surprised if there's a steady stream of hikes through the year, not just the next three meetings.
So what about valuation? Because I hear a lot of people talking about equities and saying, even though we've taken some of the valuation off, we're still pretty richly valued in the S&P.
Well, it's pretty interesting because at the end of the day, when we're talking about hiking and we're also talking about taking money off of the balance sheet, that does take liquidity out of the system. It makes everything look more expensive. So to your point on valuation, the S&P right now is trading a little bit above 18 times forward. That's not especially cheap. It's kind of the mean, I would say. If we go back to the 2020 high, it was actually above 30 times. And if we go back to the GFC low, it was closer to 10 times. One point I would make, though, and this is what I am sort of excited to share, is that when you take out those mega cap tech stocks, it's closer to 13. So it's not really apples to apples. I'll have to try to work with our markets team on how to build that out to see what it would look like without those mega caps. And what's interesting about that, the mega cap techs have come in so much. So I don't know. I think that maybe there's a little bit more room for valuation than folks might think.
It also may affect the comparison valuation to, for example, Europe, which doesn't have the mega tech.
Absolutely. That's a great point. That's a great point because everybody's been talking about that. Where do you go? Europe, China, the U.S. That's a great point, though, in terms of not being able to really make that comparison.
That's really interesting. Thank you so much to Abigail Doolittle for that report on the markets. Coming up, this is Balance of Power on Bloomberg Television and Radio. We're going to take a look at Ukraine and also what's going on with President Biden's trip. He's just coming back from Poland now. We'll talk with former Brigadier General Mark Kimmitt. That's coming up on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, President Biden is now up in the air, on his way back from Poland and Ukraine. Anne-Marie Hordern, our Washington correspondent, has been traveling with the president. She is still in Poland, and we turn to her now for a summary of exactly what the president got done. Anne-Marie?
Good afternoon, David. Yeah, today was really about, again, NATO, and the president wanted to bring this message to the Bucharest Nine. Remember, these are countries that are either formerly part of the Soviet Union or were formerly part of the Warsaw Pact that is obviously now dissolved. And his message to them is that the United States considers Article 5 a sacred obligation. He once again reiterated, like he did in his speech in Warsaw, that while Putin wanted this Finlandization of NATO, what he got is the NATOization of Finland and Sweden. So this is something the president is really going to walk away with, this idea that he was able to keep NATO not just united, but also expanding on it. But David, obviously, this trip, the highlight was the president showing up in Kiev, in Ukraine, a war-torn country. And I spoke spoke to the president's senior director for Europe about this, Dr. Amanda Sloat, and she really gave some context on why this trip particularly was different than prior trips from other presidents. Take a listen.
We've obviously seen presidents in the past go to places like Iraq and Afghanistan where you had a large military footprint. And so there was a significant security risk, and the president made the calculation that it was worth the risk to be able to deliver the message both to the Ukrainians as well as to the rest of the world.
Clearly, David, this is sending a message not just to adversaries like Moscow of the United States, but also a strong image for the president as he plans to announce a 2024 bid. Him showing up, walking around with his aviators as air sirens are going off in the center of a war-torn country. He's wheels up, as you mentioned, back to Washington, D.C. The focus for the rest of the week will be, and the president highlighted this, but we don't know the specifics just yet, more sanctions against Moscow.
Okay, Anne-Marie, thank you for this and also for all your reporting over there this week for Bloomberg. That's Anne-Marie Hardern, our Washington correspondent. And now for his perspective on exactly what the president did get accomplished for this trip, we turn to retired U.S. Army Brigadier General Mark Kimmitt. General Kimmitt has served as an Assistant Secretary of State and also as a Deputy Assistant Secretary of Defense. So, General, thank you so much for being with us. From your point of view, understanding the battlefield in a way that I certainly do not, what do you think the president may have accomplished?
Well, I think it simply comes down to an old quote that Napoleon said, the moral is to the physical as 3 is to 1. It's tough to fight on the battlefield. It's tough to fight that physical battle. But if you're trying to herd 30 countries, that's like herding 30 different cats to keep them together. And what the president accomplished more than anything else, and I have to compliment him for this, is that he has kept the NATO coalition together for a year. He basically re-energized the coalition after year 30. Among 30 countries that you would never expect to keep a single cohesive view, particularly in the pressures that those country leaders are probably hearing from their own people. That's what he accomplished.
And Mark, I will say, at least from where I sit right now, it looks like he's going to have to do that because it doesn't look like these things are going to go over anytime soon. Give us your sense of what's going on with the Russian, I guess, offensive over in the east.
Well, I think we can talk about tactical offensives, tactical defenses. In my mind, strategically, there is a stalemate right now. These are like a couple of punch-drunk fighters at about round 12. We've gone from a battle of maneuver to a battle of attrition, and really right now we're seeing a war of exhaustion. We're continuing to add firepower into the fight for Zelensky. I would expect Putin is going to try to add firepower, but I would not expect to see any type of grand land-grabbing offensives the way that we saw last September, either for the Ukrainians or for the Russians over the next few months.
Let me ask two specific questions. The first one, ammunition, because we've heard increasingly about a depletion of the ammunition available to the Ukrainians. Where are we on that? And do we have the capability of supplying them with what we need to?
Well, I think it's going to be tough. It's important to recognize that the Ukrainians are using somewhere on the order of 60,000 artillery rounds per month. That's an extraordinary number. That sort of approximate World War I levels of artillery fights. I think both sides are going to be cutting back until they can get their economies, whether the NATO economies or whether the Russian economy, more into a war footing. So I don't think they can keep this up. They can probably keep it up for quite a few months, but some projections have Russia just completely running out of artillery ammunition by the end of the year. And given that what we're seeing right now is an artillery war, that's going to be critical.
General, the other question I had about the armament, at least, is the tanks. We heard so much about tanks, the Leopard 2 tanks, M1 Abrams tanks. At the same time, I'm not sure those tanks are making it to the battlefield yet, are they? What's the delay?
Well, the delay is a combination of training, and there's still some political discussions about those going in. There is not unanimity among the NATO nations about putting them in. But it takes a long time to train a tank crew. It takes a long time, not just to get the tanks in, but the logistics support that they need to keep them running. I'm a bit of a heretic on this. I don't think that these are going to make the same amount of difference as, say, the HIMARS did or the Javelins did, but it is good to see them going in.
Well, I want to come back to something you and I have talked about more than once, and I'll summarize what I took to be your point. What we really need to do is hit the Russians behind the enemy lines. I should say the Ukrainians need to hit them behind the enemy lines. Some of their supply depots, some of their infrastructure behind there. That's what needs to be done. Do they have the armaments required to do that, or do we need to supply them with something more to enable them to do that?
Well, I think the most important thing, first of all, to do that is intelligence. As long as we've got precision intelligence about where those command and control centers are, where those logistics centers are, those supply routes, those ammunition dumps, then it's just a matter of getting the HIMARS and the other rockets that they have onto those targets. I was glad to see the president announcing more HIMARS ammunition going in as part of this $500 million package that he announced yesterday. But you're exactly right. My view is that the more that we can take the logistics away from the Russians so that they're unable to mount an offensive, that come springtime, there will be a decided advantage on the part of the Ukrainians to either prevent the Russians from an offensive or at least having a minor offensive of their own that I don't suspect will make great ground.
For whatever reason, General, we have a tendency in the media to focus on the armaments, the ammunition, the tanks, the HIMARS, things like that, and not on the soldiers. What's the situation with the soldiers? Because as I understand it, both sides are going through soldiers pretty fast.
They are, but again, going back to the Napoleon quote, the morale of the Ukrainians, from everything that we're seeing, is just extraordinary. They know they're fighting for their country. They know they're defending their country. They have had history against the Russians in the past. So they are fighting in a manner that nobody expected them to. Look at the Russians. They had to bring in Wagner Group former prisoners who are being slaughtered on the battlefield. I don't think there's a lot of high morale in the Russian army, but nonetheless, the Russians are just continuing to throw waves and waves of Russian soldiers into the fight, and I think the casualty rates are showing that. So bottom line, Ukrainians have far higher morale. They are on home turf, so to speak, and what they've got to be worried about is not the quality of soldiers on the Ukrainian side, but the quantity of soldiers that the Russians are willing to throw into the fight.
General, it strikes me that if you go back a year, 10 months ago or so, there was a lot of talk about fancy new weapons, things like thermobaric, I think they were called, bombs, and what difference they'd make for the Russians using against the Ukrainian. Now we hear about the Satan II, which is essentially it's a MIRV weapon using nuclear weapons. Are we over-focused on these fancy weapons?
Well, I really think so. Everybody talks about the game changers. The Javelins have been a game changer. The HIMARS have been a game changer. The tanks are going to be a game changer. But as you said, it really comes down to the quality and the morale of the individual soldier. Who's firing that round, who's shooting that javelin, who's riding that tank. So at the end of the day, it's really going to come down to the bravery and the capability of the individual soldiers and their units, more so than the specific ammunition that they're using or the specific weapon that they're employing.
General, finally, I want to come back to probably the biggest question, which is what's the objective? Is it clear what it is? Is the objective for Ukraine to win? Does that mean even taking back Crimea? Have we stated what the objective is, and are we doing what we need to achieve that objective?
David, it simply comes down to the war aims of the two fighters. The two fighters, Zelensky says his objective, his war aim is to retake the Donbass, retake Crimea, and eject all Russian soldiers from the generally recognized borders of Ukraine. President Putin, on the other hand, says that's not going to happen. We're at least going to keep the Donbass and Crimea. Neither are flinching. Both see those as their war aims. And at this point, those are irreconcilable objectives if we're talking about any level of negotiations. Something's got to give. I think we'll see that happen sometime later this year. But the objectives that both have set out, neither are achievable, and candidly, they can't be reconciled at the negotiating table.
Mark, thank you so much for being back with us. That's retired U.S. Army Brigadier General Mark Kimmitt. Coming up, President Putin's response to the Biden visit to Ukraine and Poland. We're going to talk with Russia expert Angela Stent of the Brookings Institution. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The day after his address to his nation, Russian President Vladimir Putin met with the chief diplomat from China, Wang Yi. This is part of what he had to say after that meeting.
Russia-China relations develop like we planned in previous years. Of course, we are waiting for the head of China People's Republic to visit Russia.
Welcome now, a true expert in Russia and particularly in Vladimir Putin. She is Angela Stent, senior fellow at the Brookings Institution. Dr. Stent is the author of Putin's World, Russia Against the West and with the Rest. And that is out in a new edition as of yesterday, which includes a chapter on the war in Ukraine. Angela, thank you so much for being with us. We heard there President Putin saying he's waiting for President Xi to come visit him. What is he expecting? Is he expecting a peace plan? Is he expecting lethal weapons?
Maybe he's expecting both. We've heard from the Secretary of State that, in fact, the Chinese are thinking about providing lethal weaponry to Russia. And, of course, they've been warned by Secretary Blinken and others that they shouldn't do that. I don't think Putin's interested in a peace plan. As your previous speaker said, he thinks that he can toughen this out, that the West will still, the unity will fall apart, and that in the end he will achieve his goals, although it's really not completely clear what his war aims are at the moment, and you wouldn't be able to know that from the speech he made yesterday. So he'd like the weapons, but if he can't get the weapons, he just wants more Chinese support, and probably also the Chinese may have been helping Russia evade some of the sanctions. So I think economic assistance would be on the table too.
Angela, it strikes me that just watching President Putin, it appears that he has a very different perception of what's going on in Ukraine than what we in the West do. And there's a tendency for us to say we're right and he's wrong. At the same time, is there anything he's seeing around him that would indicate he has to change his views in his economy, in the support of his people, in his generals? Is there anything causing him to rethink the thing?
And not that we can see. Again, if you go back and you watch or read the speech that he gave yesterday, he's just digging his heels in. And he keeps going back to World War II and saying this is just like World War II. And the Soviet Union toughened it out then, and we endured, and we can endure lots of suffering, and the West can't do that. So what he's also done, I would say, in the past years since the war broke out is he's really consolidated his power domestically. He really seems to have no rivals, no one who could take over from him. There are no checks and balances on either his power or really that of the army. So he doesn't seem to be changing his plan. He's going to throw more soldiers into this new spring offensive, get more ammunition, get more drones from the Iranians, and just keep fighting on.
Angela, from your wonderful book, Putin's World, I took away that he's a very smart man. He's a clever man, certainly a cunning man. How can he look at this situation and not think, I've got to have a plan B?
I think that we see the effects of 2 years of isolation during the COVID period when he really wasn't interacting with any world leaders. He was just surrounded by a small group of people who reinforced all of his prejudices, his view that the West is out to get him. So he really seems to be quite blinkered in what he understands. And he's convinced himself that U.S. and NATO support for Ukraine is step one of, a purported attack on Russia in the future. And so he's really blinkered, I think, by his own particular view of the world, which, of course, is very different from the way many of us are seeing this war.
Angela, one thing we heard in that address yesterday was President Putin saying that he's going to suspend, as I understand it, not withdraw from, suspend participation in START 2, which is, I think, the last nuclear arms control agreement we had with Russia. How concerned should we be about the effects of that?
I think we should be concerned. So the treaty goes until 2026. And what Russia has done is it's suspended its participation in regular on-site inspections. Part of that treaty says we inspect their facilities, they inspect ours, so we have some transparency into what the other side is doing. And if we can't see that, then we don't really know what the Russians are doing. I think the more worrying issue is if nothing is replacing New START, which it expires in 2026. And we were supposed to be having discussions with the Russians before the war began about what would be a follow-on to that. Then we would lose, as you said, the last remaining arms control agreement with Russia. This goes it goes back to the 1972 SALT Treaty that President Nixon signed with leader Brezhnev then. And so there's really nothing to prevent either us or the Russians from engaging in a new arms race, but also nothing to prevent other countries from deciding, well, maybe the world's a dangerous place and we need to have our own nuclear weapons. So proliferation could really be one of the consequences if we do not renew or have some follow-on to the START Treaty in 2026.
And finally, Angela, as much as the West has succeeded in being unified in their response to Russia, they have not had much success in apparently getting President Putin to rethink what he's doing. Tony Blinken, the Secretary of State, evidently pressed Wang Yi, the senior diplomat from China, over in Munich to say, can you help us some with Russia? Assuming for the moment, it's a big assumption that, in fact, President Xi were willing to intervene in any way, shape, or form, would President Putin listen to him?
That's a great question. And we're not, I mean, it would depend what the Chinese were offering. But I mean, Putin is insisting that at a minimum, at least the 4 territories that he says are annexed to Russia and which Russia doesn't fully control, that the Ukraine would have to make significant territorial concessions to Russia. And I think anything short of that, if the Chinese propose something else, he probably wouldn't take it seriously. But the Chinese say that they're going to present a peace plan very soon. So we might see them present one, and what we might see Russia say is, okay, let's think about this, let's discuss it, and try and put the onus on the Ukrainians and to make them look as if they're not interested in peace.
It's fascinating. It's always so educational to talk to you, Angela. It's Angela Stent. She's senior fellow at the Brookings Institution. Thanks so much for being here. Coming up, back-to-back Supreme Court arguments on the future of social media. We'll go over the Twitter case argued just today with Bloomberg Supreme Court reporter Greg Stohr. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, yesterday it was YouTube. Today it is Twitter that was before the Supreme Court in cases where individuals were trying to bring lawsuits, really accusing them of contributing to terrorist acts. To bring us up to speed on these potentially very important cases, we welcome now Bloomberg Supreme Court reporter Greg Stohr. So, Greg, thanks very much for being up there at the Supreme Court. First of all, the Twitter one today, as I understand it, just got over the argument. What did we learn?
Well, we learned that it's a very technical case. The justices spent an awful lot of time boring in on the words of this federal statute known as the Anti-Terrorism Act. It wasn't an argument that produced a clear sense of which way they were going. Overall, probably more skeptical of the family trying to sue social media companies, saying they were responsible or bore some responsibility for this terrorist attack, but not a crystal clear outcome.
So the key element, as I understand it, or correct me if I'm wrong, is the recommendations by the algorithms.
Yeah, this case was the case today. That was yesterday's case. The case today was more about the social media companies not doing enough to take down terrorist material when they had been told that there's that sort of stuff online.
Oh, that's fascinating. So the Twitter one is really, it's not a recommendation. It doesn't push things to you. It's just that it was up there at all and you could find it.
That, at least as it comes to the court, that's the issue in the case. That said, the two sides in each case basically agree that they kind of rise and fall together. So the difference in what exactly is being claimed probably is not going to make a difference here.
So explain that to me, Greg. Why does that make sense for them rising or falling together? Because it strikes me from the outside, not having studied any of it, not having read the briefs, that if you're recommending things to me, you're more responsible than if you're just putting them up there and letting people post.
David, I wish I had a clearer answer for you on that, but that is something that both sides have basically agreed to in the course of the litigation. The case that has a more sweeping effect, the one yesterday involving Section 230, will have an effect beyond terrorism. And one way I've been thinking about these two cases is the social media companies basically have two ways to win. If the court says the claim can't go forward under the Anti-Terrorism Act, they win. And they can also win by, if the court says Section 230 provides this shield that doesn't let social media and other internet companies be sued over third-party content.
Greg, as I understand it, this is a private lawsuit between the individuals suffering the loss us and the social media companies. But not infrequently, the Supreme Court will ask the Solicitor General to come in with the U.S. government position. Is the U.S. government taking a position in these cases?
They are, and they're kind of threading the needle. The argument they're saying is, we agree that Section 230 does not provide this kind of overarching shield, but in the context of these terrorism lawsuits, we don't think there's enough of a connection to what the social media companies allegedly did wrong to the actual terrorist attack to allow a claim to go forward. So they would allow, they would say, throw out these suits, but don't provide an all-encompassing shield for social media.
We never know the timetable, but I'd bet on June if I were you. Thank you so much to Bloomberg's Greg Stohr reporting from the Supreme Court. Check out the Balance of Power newsletter on the terminal and also online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to former acting EPA Deputy Administrator Dr. Dan Myberg. And this is Bloomberg.